Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video analysis. In today's price action, once again we have seen that U-turn for the equity market sentiment, and that is primarily driven by two different factors. A, it is the economic data which came over in Eurozone, the French, the German, and of course the Eurozone services and manufacturing PMI, especially the French one, which have gone back into expansion territory above that critical level of 50. That confirms that yes, once again the Eurozone is back in the expansion territory. So that really lifted the sentiment for the Dow Jones Index, and it started to trade up to 150 points plus in positive territory. Prior to that, it was only up 20 points, and if you look beyond this curve, the index, the Dow Jones Futures and the S&P 500, both of them were trading pretty much negative, and that was driven by the second factor, as I mentioned earlier. This second factor was because of Donald Trump's trade advisor Peter Navarro, whose comments were completely taken out of context. How so? He said, quote, "Yes, it is over," quote. Now, traders thought that by him saying that, it really means that the trade deal between the US and China is over. And of course, that is a very sensitive issue. So we see massive plunge over in the Asian markets and of course for the US futures as well. But then Donald Trump clarified with his tweet by saying that it is still very much quote intact. And that really pushed the US futures and everything with respect to the equity markets higher. But now the entire sentiment is very much bolstered by this economic data which is out of the US, out of the Eurozone. But folks, what I really want you guys to pay attention to is the surge in the July contract for the VIX index, which really moved higher by over 30% when this event of Peter Navarro's comments took place. So I think traders, what they are really seeing this incident is with the lens of, okay, the US and China phase one trade deal, still a very massive sensitive issue, especially the fact that China has already curtailed its imports from Tyson, one of the US based companies where it was importing its agriculture products. Now currently, of course, the excuse or the reason, shall we say, given is that because of coronavirus. But of course, Donald Trump is going to pay attention to this, and he's already provoking tensions with China with relation to Hong Kong, the new security law and everything else. Well, the entire concept, or the factor which really matters, is that the US and China trade relation, the phase one trade deal, is very much the key factor here. And traders are ready to hedge their bets by looking at alternative assets, and one of them just happens to be VIX, and the forward month contract July is the most famous one among traders. Of course, we are also seeing some sort of a surge in the precious metal as well. It is still trading well above that 1750 mark, and that remains a critical level. We don't want the price to go beyond the 1725, which is the immediate support for the gold price. As long as we stay above these key levels, I think the door is wide open for the prices to touch and go beyond the 1800 mark. That's all for today. See you guys tomorrow.